Hey, how's it going, everyone? My name is Amos, and welcome back to the Dividend Compounder Show. And folks, I swear, I'm a value investor that cares about the numbers, the data, finances, and dividends. But today, we're going to go ahead and look at another growth stock known as Adobe. And listen, it's Saturday night. If you're anything like me, you're doing some stock market research instead of, having a life. So hey, do me a solid and hit that like button for a fellow stock market nerd, please. And I wanted to make this video because I have been stalking and eyeballing Adobe for probably closer to 3 years now. And finally, the opportunity has arrived. And by the way, there's a ton of people all over social media, ranging from TikTok to YouTube, that pump stocks because they're bag holding them. And I promise you, I am not one of them. For full transparency, I do not own any shares of Adobe. So I'm going to be looking at this without any bias to figure out if I want to buy in or not. So currently, year to date, Adobe is down approximately by 22%, while everything else appears to be overpriced or at their 52-week high. For Adobe, that is not the case. Their current trading multiple is a 39. However, their forward PE ratio is a 22. So what is going on? We're going to investigate all of that and more. And at the end of the video, I'm going to throw down my price prediction on what's going to happen to Adobe. First things first, let's go ahead and talk about Adobe's business model and how they make revenue. So on the surface level, Adobe is in the business of content creation and PDF documents. If you have ever downloaded a document from the internet before and you signed off on it, it was most likely a PDF Acrobat file. So they are best in class and market share leaders for both categories. And Adobe makes their money on a subscription basis, which, as we all should know, is the toll booth cash generating way to make revenue, which is why Amazon Prime, Costco memberships, and everyone else is changing their business model from one-time fees to being a subscription model. And when you think about Adobe Premiere Pro, which is their video editing software, you might think of a little hipster sitting in a coffee shop, with a mustache, wearing skinny jeans in Portland, Oregon, editing videos of a dog. The truth is, Adobe makes a bulk of their revenue in that category from enterprise customers that pay bigger corporate fees for the Creative Cloud. And their Creative Cloud is the portfolio with a bunch of different apps that has everything to do with video editing, photo editing, and in between. So that's what they care more about. That way, the entire marketing department of a corporation has access to the best tools. Likewise, with their Adobe Acrobat, the PDF one-stop shop, it's not your fee or my fee that matters. Rather, it's Amazon, Nintendo, and American Express that uses it across their company and are hit with an enterprise license fee that makes an individual's fee a splash in the bucket. All that to say, Adobe is not in the business of trying to survive off of the consumer's money. Rather, it's the corporations. So think of Adobe as a B2B company. Another way is to think about it like this. Every major corporation in the United States has a need for graphic designers, web designers, video editors, and a social media team, and etc. And to fully equip them to do their job, they need access to content creation tools like what you see on your screen right now. Photoshop, Adobe Premiere Pro, Illustrator, Adobe Firefly. So as you can see, Adobe's portfolio and their ecosystem is an all-in-one toolkit for content creation and marketing. And before I forget, the retention rates for corporate customers tend to be loyal and a little more sticky year after year. Whereas on the other hand, with individuals, we can end our subscription at any moment. As you can see, we can go month to month or pay 12 months in advance, meaning the individual customer is a lot more unpredictable with a lower revenue stream. But on that note, I don't want to hype up Adobe too much because I do want to call out that Adobe's portfolio, for almost every application that they have, there's a competitor and a rival version out there. So when we think about video editing, there's Apple's Final Cut Pro, Sony's Vegas, DaVinci Resolve, and on the photo side of things, well, that's where I think Adobe is best in class and nobody comes close. They're pretty much a monopoly. However, from my research, I have seen that GIMP is slowly growing, which is like an open source and it's free to use, but nowhere near the capabilities of what Photoshop and Illustrator can do. So think of Adobe like Microsoft Office. Sure, they have competition, but everyone uses Microsoft Word, Excel, PowerPoint, and everything else in the Microsoft Office suite as business standard. Likewise, Adobe's software and platform and apps are the industry standard for both professionals and for people that are just doing this stuff for fun, despite the fact that there are peer products out there. And on that note, let's go ahead and look at some finances and numbers, because if we only talk about their story and their business model and the intangibles, this would not be a Dividend Compounders video. So the first thing that we're going to be taking a look at is the income statement. We want to see, is the top line, aka the revenue, growing year after year? And it does appear to be the case. In 2019, they generated $11 billion of revenue. The next year, it went up by 15%, and then the following year, 22%, 11%, 10%, and for the trailing 12 months, it went up by another 10%. So the revenue increasing year after year, exactly what you want to see. I don't care if it's organic or inorganic growth, as long as the top line is increasing, then we can start looking at the margins and the net income and seeing how they're generating that revenue. And then the next thing we want to take a look at is the balance sheet to figure out the cash and the debt situation. So right now they have about $7.5 billion of cash. And when we scroll down to look at their debt situation, the total debt is $6 billion. So when we look at the net cash to debt, they have about $1.4 billion of cash left over, which tells us that this is a cash-heavy company. However, I do want to call out, year over year, their net cash to debt decreased by almost negative 58%, which is not what you want to see. But seeing this, I still wouldn't raise red flags unless this happens to be a trend and it goes down by another 58% for the following year. But if they stabilize at around this $1.4 billion mark or even reverse and go back upwards in that kind of trend, then that would be a good thing. But this is something to be cautious of and to be mindful of. And then when we assess their shares outstanding situation, let's scroll down and see what's happening. Back in 2009, right after the Great Recession, there was about 531 million shares outstanding. What we want to see is a company that is buying back their shares. And in the case of Adobe, that is exactly what is happening. They do not pay a dividend, but what they do is they buy back their shares, which artificially pumps the stock price. So you get returns in a different way. And as of right now, there's about 443 million shares outstanding. And ever since 2014, they are buying back shares every single year, except for this tiny little green mark right there where they paused in 2015. And the next metric that we are going to be considering is the profit margin. As of right now, their gross margin is sitting at almost 90%, just shy of it. So realistically, 89%. But scroll down with me and look at the net margin. This is how much profit they have left over after paying for all the expenses and operational costs. A 25% net margin, net profit. This is absolutely beautiful to see. And then, when we take into consideration their free cash flow situation, it is just as beautiful. In 2009, they posted about $998 million of free cash flow, just shy of that magic $1 billion mark. However, since then, they have just been on a roar, an upward trend, and in 2022, they posted $7.3 billion, and as of last year, they posted $6.9 billion. So their net margins, their revenue, and their free cash flow looks like a beautiful picture. Yes, it did decrease by a little year over year from 2022 to 2023, but it's still headed towards the right trend when you look at it from a bird's eye view. When we look at Adobe's cash flow statement to look at what their current free cash flow situation is, currently it's sitting at $6.5 billion, which is a decrease of 14% from last year. So it is headed towards the wrong way, but it's still $6.5 billion of free cash. So my whole thing is, even if the free cash flow stabilizes at around $6 to $6.5 billion, that's still amazing to see. If they can consistently pull this off year after year, I wouldn't be complaining. However, in a perfect world, of course, you want to see this number increasing year after year. But if not, the second best thing is to have it stabilized and be reliably at that number. So next, let's go ahead and talk about their earnings, which they recently posted and resulted in the stock selling off. And I thought the stock, from a preliminary research stance, I thought it was selling off because of like a huge earnings miss and a devastating guidance update from the leadership. However, that's not what happens, because Adobe beat on the EPS expectations and for their revenue expectations. They just crushed it. But with that said, the leadership did issue the tiniest, I'm talking about the size of a nipple, the tiniest correction in the form of a decrease for their future guidance. Adobe initially expected fiscal 2025 revenue to come in at around $23.8 billion. I'm sorry if I said that too fast, $23.8 billion. But now they're estimating $23.3 to $23.6 billion. Yes, that's it. I thought maybe they were saying, hey, I know we said $23.8 billion, but I think we're going to come in short at about $19.5 or even $18.8 billion. Then, to me, I would feel like the sell-off would make sense. But this is not the case, folks. The Adobe leadership team is being transparent and honest up front and saying like, yo, we're going to miss the forecast by the shortest of margins. And as a result, Wall Street is just selling out of this stock in a very stupid manner. Everything else in the earnings report was beautiful. Check this out, right? The content creation software that we talked about earlier, the video editing and the photo editing, that revenue was up by 12% year over year. The earnings per share was up by 17% year over year, and the PDF business was up by 10% year over year. Yes, the PDF. So you tell me, does that sound like a dying business when almost every metric is up by double digits? So I think Wall Street is fearing the worst with Adobe and thinks this is the beginning of the end because they gave a lower guidance by the smallest of margins. They think this is where Adobe is sliced with their first cut. And in a year or 2 or 5 years down the road, Adobe is going to bleed out from 1,000 tiny cuts all over their body, including the nipples. That's what Wall Street is thinking. They're being very catastrophic and thinking very over dramatically. I think they're just blowing this out of proportion. And what you see on your screen right now is the visual representation of how awesome they did in their most recent earnings report. So what's the real reason as to why Adobe stock is falling? Well, what is affecting them right now is the rise of startups and small AI platforms and software that is disrupting the way that content creation is being done. That's the bigger concern that makes Wall Street very, very bearish on this company, and they're selling out of it like there's no tomorrow. Now, I'll share more about this once we reach 5,000 subscribers and I upload my life and investing story video, but I have been making YouTube videos since 2005. And believe it or not, I used to be an actor and a model for a brief period of time. All that to say, I have a ton of hands-on experience with Adobe, their products, and have been around professional editors. And I gotta say this, Adobe is the industry standard from modeling agencies all the way over to film studios. The art of creating videos and modifying photos has evolved over time. Like I still remember in middle school when I made my first YouTube video, my video camcorder was like the size of an American football. And even back then, we had to use Adobe software to edit the videos. All that to say, AI is here to help enhance and optimize photo and video editing. AI is not here to replace humans or to make Adobe obsolete. Instead, AI is going to complement human creativity, making workflows more efficient and less tedious. AI is going to enable creators to focus on like the artistic vision and the big picture. AI is going to take care of the stupid and the dirty stuff. I think of it like delivering mail in the late 1800s. At first, we had to utilize horses and gallop across town to town in order to drop off a package or a letter. Then we transitioned to using cars. And in the future, there's talks of people using drones to drop off packages. So while the methods of transportation have evolved, the goal of ensuring the package reaches its destination remains the same. Think of that as the video editing process. AI is going to make the editing process better for everyone. AI is not going to get rid of the need for a human. And the fact of the matter is, it's still going to require someone to do the final review and to make minor adjustments after AI gets done with the bulk of the work, whether it's a photo or like a 2-hour-long raw footage video. And it's not like Adobe is anti-AI. I don't know why Wall Street thinks that Adobe is lacking AI. I don't think Adobe is going to be doomed because they have been ahead of the curve with AI software like we just talked about, right? Firefly. And not only that, as someone who uses Adobe products, Adobe has been integrating AI editing features in their software as they develop them. It's not like everything is manual. It just goes to show that Wall Street analysts and those investors have never edited a video or touched an Adobe product before. So to think about Adobe as a tool, whether there's going to be a human involved or not in the future, still has a crucial place in the creative space. And I say that because it doesn't matter if it's a human or an AI that edits the photo. Adobe software is still going to be the winner because it's the software that's going to do the editing. Does that make sense? However, Wall Street likes to see the worst in every situation, and they are hyping AI to be an Adobe killer without fully understanding the landscape. The final product does not change, like the example that I just gave with delivering letters. So to get a polished video, someone is gonna have to pay for it. Adobe's money-making model is not going to be under threat by AI. If anything, they're going to gain more customers. I repeat, Adobe's economic moat will not be in threat. Sure, there's going to be small players that are giving them a hard time and taking away some market share for the time being, but Adobe is the biggest dog in the fight. If they want to, if they really want to, they can just utilize their mergers and acquisitions team to buy out the competition. I'm talking about the video and photo editing softwares. Then they can integrate whatever they buy into their existing software. And just in case you didn't hear me the first time, there is AI featured all over Adobe products, from the beginning to the middle and to the end of the video or photo product. There is AI from start to finish. Alright, I think we all get it. AI is not going to kill Adobe. If anything, Adobe is going to benefit from AI features being integrated into their software. So now let's go ahead and talk about their future. By the way, what you see on your screen right now are all the various apps and software that they offer for their Creative Cloud, anything to do with creating content. And as you can see, the price is pretty steep. For Photoshop, which is the industry standard, it's about $23 a month. And for Premiere Pro, it's also $23 a month. So you can take a look at this stuff as I talk about their future. So when we consider their portfolio and various software, it kind of reminds me of the Allied forces tearing it up on D-Day when they landed on the beaches of Normandy in World War II. They penetrated deep into Nazi territory, and the rest is history. That's what I see when I see all of these different soldiers. You got the infantry right here, you got field artillery, you've got some tankers here, you've got some pilots, they have it all. Likewise, when I think about the competition and their peers, they really do not stand a chance. They don't have a portfolio that's as vast and as complete as Adobe's. At least for now, they don't. So when we consider the facts, are they a cash-heavy business with a wide economic moat going on an unjustified sell-off that puts them into undervalued territory? Yes, they are. And based on their company history, it's in their DNA to acquire any external threats to their business. Some recent examples include Magento, Marketo, and Workfront. And believe it or not, these are all companies in the business of analytics, workflow, and digital marketing, which if you're paying attention is completely different from their usual bread and butter, what you see on your screen right now. But I do want to call out that Adobe did try to acquire a competitor known as Figma for $20 billion, but it fell through. So their success rate of acquiring the competition is not 100%. But with that said, earlier we learned about Adobe's two business segments, their content creation side of the business and then the PDF side. But with the recent acquisitions, Adobe Adobe is also making a small leap into the digital marketing space and is competing with Salesforce, ticker symbol CRM, to deliver customer analytics for e-commerce businesses and websites. So, what we are witnessing is Adobe has the creative tools, Adobe has the PDF business, and now they're also doing digital marketing. But don't get me wrong, I think Salesforce has an upper hand with their B2B customer base, and they are best in class. However, I do think Adobe is targeting an entirely different demographic of small businesses, individuals, and media companies such as advertising agencies and anyone that has a creative trait in the company DNA. And when you think about it, it makes sense, right? They're already using Adobe to edit their social media posts. So why not say yes when Adobe offers you that bundle deal to have Adobe handle it all, including the customer analytics and any potential leads with digital marketing? So between you and me, I think this is genius because when a company becomes a one-stop shop, their margins go through the roof from start to finish. If they can handle it all and the customer's dependence on Adobe grows even wider, I would argue that just makes their economic moat even stronger. So what you see on your screen right now is the digital marketing arm of the business known as Adobe Experience. These are all the different products, services, and software under that business arm. And from my understanding of Salesforce and their platforms for HR, recruiting, and job applications, by the way, if you have ever applied to a Salesforce platform, you have to not only insert your digital resume, but you have to manually input all of your data, which I always thought was so stupid, but whatever, that's neither here nor there. Once you use a digital marketing software like Salesforce or Adobe's Experience, it's pretty sticky. Meaning it's going to be hard to switch to something else once you integrate and sync all of your data into it. So that's another economic moat that Adobe can add to their belt. High switching costs, not necessarily in the form of monetary reasons, but time, energy, and loss of production. So, unlike the creative software like the Photoshop and the video editing stuff, where people can be a member on and off every single month, once a customer commits to the Adobe digital marketing service of, Adobe Experience, they're going to be consistent. They're pretty much going to be a customer at least for 2, 3, 4, 5 years. And as it stands right now, about 75% of their revenue is from the creative software, and about 25% of their revenue is from the PDF stuff and the digital marketing endeavors. I think the company is ramping up to have their revenue skew more towards digital marketing. And I say that because almost all of their recent acquisitions have been catered towards what you see on your screen right now. So that's just my guess. And in a perfect world, I think Adobe's long-term vision is to have a 50-50 healthy split, where 50% of their revenue comes from, the video editing stuff, and 50% comes from the digital marketing stuff, which I think I would bless off on that business strategy. Which brings me to the next segment of the video. What is my game plan and what do I think is an appropriate buy price? So right now, to be fully transparent, I think there's definitely better opportunities in the stock market that can potentially yield a bigger rate of return, such as AMD, Google, and Realty Income Corporation. However, I think at the right price, Adobe is not a bad buy at all. In fact, you can call me crazy, call me ugly, call me whatever. I'm pretty bullish on Adobe. And based on my calculations, I think Adobe is worth about $537 a share. Yes, within the next 12 months, by the end of 2025, I can honestly see Adobe bouncing back up from their current trading price of about $465 a share to $537 easily, as long as they report positive earnings quarter after quarter, which I have a good feeling that they will, because there's no hint of a sign that they're slowing down at all. I mean, yes, they did revise their revenue guidance, but all the metrics were up by double digits, so I think they're going to be okay. And you can get mad at me or call me delusional, but I think if everything goes well and they crush expectations and they revise their guidance to be more bullish, then I think Adobe can easily hit $597 a share. Easily. But right now, the narrative surrounding Adobe is very bearish, and there's a lot of fear surrounding this company. But even so, 2 days ago, almost all the analysts that are following this company revised their price targets for Adobe, and they think collectively that it's worth $600 a share. So we're seeing eye to eye that Adobe right now is criminally undervalued. With a 20% margin of safety baked in, that's what you're basically getting. It's a steal at its current trading price of about $465. Depending on when you watch this, Adobe has the real potential to dip even further and go down to like $460, $455, or even bounce back up. However, for me, I'm personally going to be jumping in when it reaches about $450 a share. If it doesn't dip to $450, then I'm absolutely okay with missing out on Adobe. But if it does dip to like $440 or $450 a share, for me, it's a no-brainer. This is a growth company that is doing fine and has a bright future in my opinion, and their strategy and roadmap for the future looks pretty good to me, despite the fear and the bearish sentiment that's happening on Wall Street. However, I do want to say you cannot look at a company with a blind eye. So I am going to address some of their near-term, short-term threats. If Adobe continues to adapt to the AI movement and integrate it into their software, then they're going to be okay. Actually, more than okay, they're going to thrive. And if people think ChatGPT or some other AI software is going to replace the traditional graphic designer, dude, that's not going to happen. That's not going to be the case. I think generative AI is going to help with the initial work. Like if you tell them I need a banner that features a painter with big nipples, like they can make it, but what if the nipples are not to the client's preference? And the color of the border is just not what he's looking for. So it's going to require a skilled person to adjust the AI work using an Adobe app to make those fine-tuning details. The human element is not going to disappear. But then again, I can absolutely see the validity of that argument. Why would a business pay a graphic designer to create a banner if I can just use a free AI tool to generate that image for me? Like, that makes perfect sense, and it's valid. It is. Because if AI gets to the point where they can create an image or a video from start to finish to exactly what the customer wants, yeah, that's going to be trouble, because that's going to lead to less business for the creative who's going to ultimately end their Adobe subscription because they don't need it anymore. That's a real possibility. However, if you're going to be truly honest with yourself, do you think Adobe operates with the mindset of Intel, playing it safe and not shooting for innovation? Or do you think Adobe is the type of company that is going to be integrating that AI feature into their software? So it really depends on what you think. And my guess is if that's the direction that creative arts are going, where AI just replaces everything, then painters, artists, video editors, and similar fields are all going to be cooked, as the young kids say. But as someone that edits videos almost every single day of the week, this is my second YouTube channel. I have another one. I don't think that AI is going to automate the process from start to finish. I really don't. Like I alluded to earlier in the video, I think AI has the real potential to get rid of all the repetitive and time-consuming tasks of photo and video editing. But in the end, it's still going to require a human to do the final review, to make the final touches, to add and insert, imagery, and to make sure that the final product makes sense to the audience. I think AI is a tool that a creative person can use. I don't think that AI is going to replace the human itself. Does that make sense? That's how I feel. Despite everyone else trashing this company, I still think they're pretty solid. And remember, I'm not a shareholder, I have no skin in the game, but I genuinely think that Adobe is pretty good. And if I'm wrong, please let me know. Help me to see the light. If you know something that I don't, correct me. I welcome constructive criticism. I'm not the kind of guy that prefers to sit in an echo chamber. If I am wrong, you have to let me know, because I might buy shares of Adobe, and if it's terrible, then that could lead to me prematurely losing all of my hair and a receding hairline, and I don't want that. Do me a solid and let me know if Adobe is terrible. With that said, I love you, stay safe, and if you like this type of content where I talk about the story, the narrative, the intangibles of finances, and the data, then go ahead and subscribe. This has been another episode of the Dividend Compounder Show. Amos signing out. Peace.